All right, let's dive in. Today, we're looking at a really groundbreaking project from the Middle East that could totally reshape how money moves across borders. We're not just talking about the region either. This could be a blueprint for the entire world. It's called Project Aber.
So to really get why this project is such a big deal, you have to understand the scale we're talking about. By 2025, the market for payments just between the Gulf Cooperation Council, or GCC countries, is set to hit $9 billion. That is a massive, massive amount of economic activity.
And here's the catch. You've got this huge, growing volume of money, but the system it runs on, well, the basic plumbing is decades old. So the big question becomes, is that old system actually creating friction and slowing down a $9 billion market?
And that gets us right to the heart of the matter. The problem isn't a lack of money, not at all. It's the friction, all the little inefficiencies and delays involved in moving that money safely from point A to point B. For as long as most of us can remember, the global standard has been what's called correspondent banking. See, to send money from, say, Saudi Arabia to the UAE, a bank in Riyadh doesn't just wire it directly. No, it has to go through a partner, a correspondent bank in the UAE where it keeps an account. This has been the bedrock of international finance for ages. Now, the engine room of this whole system is something called a Nostro account. You can think of it as a special pot of money that a bank has to keep in another country in that country's currency. So a UAE bank needs an account in Saudi Arabia filled with riyals, and a Saudi bank needs one in the UAE with dirhams. But here's the huge hidden cost. All that cash just sitting there is basically trapped. It's not being used for loans, it's not being invested, it's just stuck.
And this just lays it all out, doesn't it? On the left, you've got the old way, trapped liquidity, slow processing, a huge compliance headache, and single points of failure. I mean, if one link in that long chain breaks, the whole payment just grinds to a halt. On the right, you have the vision for Project Aber, which is the exact opposite: efficient capital, direct and fast settlement, simpler operations, and a network that's actually resilient. The need for a change is just crystal clear.
Okay, so how do you even begin to fix a problem this big? Well, the central banks of Saudi Arabia and the UAE actually teamed up to find an answer. They called it Project Aber, which means crossing in Arabic, a perfect name, and it's a really brilliant solution.
At its core, Project Aber created a whole new kind of money. Now, let's be clear, this is not a cryptocurrency like Bitcoin that you or I could go out and buy. Think of it as a special-purpose digital currency, jointly issued and backed by two central banks. And it's designed for one thing and one thing only: letting commercial banks settle payments directly with each other instantly.
And look, this isn't just some idea on a whiteboard. Project Aber was a full-blown, year-long proof of concept. And when the results came in, they proved it. This new model works. Let's dig into what they found out.
The project proved three absolutely critical things. First, the architecture is resilient. Because it's a distributed network, there's no single weak link that can take the whole system down. Second, it has settlement autonomy. This is huge. The system can keep processing transactions even if one of the central banks temporarily goes offline. And third, its performance was off the charts. It blew past expectations for speed while still meeting all the tough regulatory demands for privacy and traceability. It was, simply put, a massive success.
So a successful tech project is one thing. That's great, but what does it actually mean for the real economy? Why should businesses or even just regular people care about a new settlement system?
The single biggest economic impact comes down to this: releasing all of that capital that was previously trapped in those Nostro accounts. When banks don't have to park huge sums of money just to make payments happen, that capital is freed up to be put to much more productive use. And the ripple effects of that are huge. Freeing up that liquidity means you get stronger trade within the region, more capital becomes available for small and medium-sized businesses that need it to grow, and you get much faster settlement for the booming e-commerce market. I mean, for any merchant trying to run a business online, getting paid faster and more predictably, well, that's a total game changer.
And it goes even further. When you build a fast, modern, and reliable settlement layer like this, it becomes a playground for innovation. Fintech companies can start building incredible new services right on top of it. Just imagine automated payments that are triggered by smart contracts, or powerful new tools for businesses that make moving money internationally as easy as sending an email. This could spark a whole new ecosystem. So, Project Aber proved the concept. It's a huge step forward, no doubt, but it's also just the beginning. The real question is, where could this technology go from here?
Well, one of the most exciting possibilities is in capital markets. You could use the exact same technology to settle trades for things like bonds. This would massively cut down on risk in the financial system by guaranteeing that the asset is delivered at the exact same time that the payment is made.
And why stop with just 2 countries, right? The whole framework is built to expand. You could easily see other central banks across the GCC and maybe even further joining the network. This could create a truly global, multilateral digital currency settlement system, and it would position the region as an undeniable leader in financial innovation.
Which really brings us to the big picture question here. Is what we're witnessing with Project Aber just a fancy regional upgrade, or is it something much bigger? Is it a blueprint for the future of global finance itself?
The success of this project really does offer a clear path toward a more efficient, more resilient, and way more innovative financial system. So the final thought I'll leave you with is this. As central bank digital currencies start moving from theory to reality all over the world, will this collaborative dual-issue model pioneered in the GCC end up being the gold standard that everyone else follows? Only time will tell. Thanks for joining me.